Hello, everybody. Welcome to the Trading with Ashley show. Now, I know you are preparing for tomorrow, and I know that this is nerve-wracking. Everything that we have going on with the tariffs and a potential trade war, and I know that nobody knows how long this will last. Is this a scare tactic? Is it a negotiation tactic? Will this drag on for weeks or months? And what will it do to our portfolios? I know that that is the fear that's out there right now. So I wanted to come on and just reassure you and share a few things with you. Well, for one, everyone says, buy the dip, buy when the market pulls back. But I'm sure you're wondering, well, how much money do I put in the market? What if I put all my money in the market and then it pulls back for a longer period of time and it's a deeper correction and then my money is stuck? I mean, I know that that's a natural concern that people have. And so I wanted to give you a little bit of guidance. For one, I always encourage my members to keep at least 25% cash on the sidelines for moments like this. But the natural question is, how much of that cash on the sideline do I actually pull into the market and when? So I have several different metrics I'm going to go over with you for you to consider that may be a rough guideline for you on how much you can pull into the market so that you can take advantage of these dips on your favorite stocks, quality companies that you've been waiting to accumulate or flesh out your position with. So we're going to go over a couple of things. We're going to go over one of my favorite indexes, the Fear and Greed Index. Now, I'm going to give you a recap of that, and that's something that you can watch tomorrow. You can watch all this week, and I'll give you some general guidelines on how much of the cash you have sitting on the sidelines to get into the market, how much to pull in based on the Fear and Greed Index. We're also going to look at the VIX, and the VIX measures the volatility, and it's a great measure of the nervousness in the market. And the higher the VIX goes, the more nervous the market is. And the VIX can spike. When we had that August 5th, carry trade dynamic, the VIX had spiked to 60 unexpectedly. And that was the best time to put all of the money you had available into the market. I have one student that did that, and within 2 weeks, he was up 30% in just a few weeks, because the VIX was very high. So I'm going to give you some guidelines on that. And then finally, we're going to look at the technical analysis for the SPY and the QQQ so that you know what are the times that you might consider going in a little bit heavier. Now, I wanted to share with you, what if you don't have any cash right now? So that's a common issue because some people are just 100% invested and they're like, I don't have any extra cash. So I wanted to give you a few guidelines on how to raise cash. You should spend the better part of tonight going through your portfolio and determining those positions that you don't have strong conviction about, and consider cashing those in, even if they're at a little bit of a loss. If you don't think that they're coming back and coming back strong, or if you just don't know, then you might as well redeploy that money into something that you have more conviction with. And then you might want to sort all of your positions from top to bottom and go into the middle. And let's take a look at the ones in the middle that are flat, they haven't grown, or they've just grown a little, or they've just pulled back a little. Those might be the ones to cash up and get ready for what's to come. Maybe you want a quality position in NVIDIA. Maybe you want a great position in Palantir, Google, Amazon, Microsoft. And if all those are going to pull back and you don't have the money to put into them, then you won't be able to enjoy the ride up when everything comes back. And so you might want to go looking at those positions that have done very little for you, and you can redeploy that cash into something that's more quality and that can actually now get going for you if you're able to get it at a really good price. And so that's a way to build cash, and build cash quickly, because here we are this week and we could see definitely some volatility that might be the perfect opportunity for you to start to establish some of your positions. So first and foremost, I want to go look at the CNN Fear and Greed Index. We're going to do that now. This is the Fear and Greed Index, and it oscillates from 0 to 100, and it has proven to be a really good indicator on when to put money into the market and when to take money out of the market. It is done every week, and they take a survey of participants and they come up with a number based on a variety of factors. So let's take a look at what we're looking at now. Right now it's at 46. This was done Friday before all of the drama of the weekend. So I am assuming that Monday when we open, just based on what I'm seeing with the futures and with crypto, that this is going to fall, significantly. So one way to look at it is this. We have these 4 quadrants. We have 0 to 25, 25 to 50, 50 to 75, and 75 to 100. So if you have dedicated 25% of your cash and it's to the side and you're wondering how much to put into the market, so if we are between 75 and 100, I like to keep that 25% of cash on the side. I don't like having that in the market. I want to save that for a rainy day. But once we're into the greed, I will maybe put a little bit more into the market at this point. Maybe I'll pull 5% out and leave 20% of cash while we're in the greed category. Neutral is just that. It's in the middle. So I really don't do a whole lot one way or the other. I just work with my positions in the market when I'm in neutral. Now, once we get to fear, that's anywhere from 25 to 50. I like to have about 15% of that 25% cash, I like to have that into the market ready to go. And anytime we are below 25 on the fear and greed index, I like to have all but 5% of my extra cash in the market, because this extreme fear right here, this is when wealth is built. This is the least riskiest time to actually be in the market, is when we're in extreme fear. All right, now that you have a handle on that and you kind of know how to look at it, what to do with the information, now let's go take a look at the VIX. Well, what is the VIX? Now, part of the fear and greed index is market volatility, the VIX right here. So I've come up with a range similar to how I have with the fear and greed index of how much money to pull in. So you can consider using the one I just showed you, or if you want to just go straight off of the VIX, you can do that as well. Let me show you what I'm talking about. So if you have that money sitting on the sidelines and you want to know what amount of money that's sitting on the sidelines do I pull into the market based on the volatility, based on the VIX number, let's take a look at something you might want to consider. Here's the different levels that I had defined. So if I have 25% cash and the VIX is between 10 and 15, I just leave that cash there waiting for a rainy day. Once the VIX gets to 16, anywhere between 16 and 20, I like to pull out about 5% of that cash and deploy it into the market to take advantage of the opportunities. Then when things take a deeper turn and VIX goes up, anywhere between 21 and 30, now I only have 15% cash in the sidelines because I'm using the rest in the market. And then once we get over 30, you'll see almost 100% of that cash be pulled out from being on the sidelines and pulled into the market. The reason I'm only 5% cash and I don't deviate from having at least 5% cash, I want that money there in case I need to roll some positions or I want to average down on some key positions. I always like having a little bit of cash at my disposal in case I need to adjust my trades. And finally, one of my favorite indicators is looking at those Bollinger Bands, looking at the moving averages, especially the 200-day moving average. It's the strongest level of support for a quality ETF, a quality stock. So let's go take a look at those key levels, and you can determine at what point you want to go a little bit heavier into the market based on how close we are to that 200-day moving average. And the last thing to show you is the technical analysis on the SPY and the QQQ. So right now we're looking at the SPY, and these are the various levels that you could consider. So as fearful as everyone is, right now we are still in the top quadrant, looking at the 1-year time frame on the Bollinger Band. We're in the top quadrant. So we're still in a bullish market according to at least where we ended on Friday. Now we are approaching the middle of the band. So once we get to the middle of the band, this is the equivalent to me of now putting in some of that cash to the sidelines. So I might put 5% of my cash, meaning I'll have 20% still on the sideline. Now, if we are to get down to the bottom of the band right here, 577, this is where I'd want more skin in the game or money in the market per se. At this point, I would want to have about 15% of my cash on the sideline and the rest in the market. But if we get down here to this 200-day moving average, this 561, that's when I will only leave 5% of my cash on the sideline, and I will be really heavy into the market at this point. Because yes, we could go below this, but it is a very strong indicator. Now, many of you have watched the video that I put together on buying leaps on the SPY. If we were to get down to this 200-day moving average, this 560.61 level, that's when I would put the bulk of the budget I put aside for that strategy into the SPY. I would purchase leaps at this point because this is the strongest level of support when you're looking at your technical indicators. Now, looking at the QQQ, very similar dynamic. We are in the top quadrant of the band, so still in a bullish market. If we were to pull back to the middle right here, that's when you might consider deploying more of your cash. And then if we were to get to the bottom of the Bollinger Band, at this point, I would only have about 15% of my cash sitting on the sidelines. The rest would be in the market. And if we get down here to 482, which is that 200-day moving average, then I'll have all but 5% of my cash in the market. And this allows me to take full advantage of the ride-up. Even if I have to be a little bit patient until that happens, eventually it will happen. This is the American market, and it always finds a way. Now, I hope this helps you. I hope this gives you a little bit of guidance to anchor your portfolio to just something that you can at least consider as you are preparing for this week. I'll be here with you all week. If you're in my Discord, we'll be trading together. We'll be looking for the opportunities. We have a lot of different ways to trade, and we will adjust that according to what the market is showing us. I hope you all stay calm, cool, and collected. Remember, we must have red days to enjoy green days. It's part of being in the market. And if you're with me trading with Ashley, there is no trader left behind. Now, if you're wondering how to trade these choppy markets, I gave you a lot of information today, but there is another video I dedicated just to that, and you can watch that right here.